Okay, Pete Custis here with smallbusinessresourcecenter.com and Resource Center YouTube channel. I'm here with Maj. He has a company called GEO Investing. He's actually a phenomenal investor with something that he does that's very unique. So I'm just going to let him go ahead and explain what he does, and we're going to talk about the market a little bit if you want to learn about investing. Maj?
Hey, thanks a lot, Pete, for this opportunity. I'm glad we reconnected again after some silence. So my name is Maj Soueidan. I'm a co-founder of GEO Investing. I think 2007 was when we founded the company. And I've been a full-time investor in the stock market for about 30 years now. I primarily invest in microcap companies, which are smaller companies, capitalized companies. So I'm not really investing in the Dow Jones. I'm not investing in the S&P 500. I'm investing some promising smaller companies that I find through my research, and it's a really good time for me doing that for all those years, and I made a living doing that. And so I just wanted to really talk more about GeoInvesting, our research process, why we chose to invest in these smaller companies, and why I do, as opposed to larger companies, and maybe a little bit about whatever comes up during the conversation from there, and how that kind of relates to what's going on now with the coronavirus and everything. So I think it'll be a good thing. So
okay.
Anything you wanted to add there before I get into it?
No, it's a good thing for your business. Of course, me being a real estate agent in Pennsylvania, and they locked down real estate and made us non-essential, definitely put a struggle, not just for my business, but for a lot of self-employed people and a lot of people who worked and had jobs. So a lot of people have been looking at investing as another way to make money, and it's working well. You being an actual investor probably affected you a lot less because you're already working in an office and don't really have to travel and do much. You just have to review the numbers. So what kind of strategies are you using? Can you explain how GeoInvesting is and the strategies you use?
Yeah, sure. And and again, GeoInvesting you can come to our site at geoinvesting.com. We have a free trial that people can check out everything we're doing. I should mention there was a movie about us called The China Hustle, financed by Mark Cuban. It was a documentary a couple of years ago. I think 2018 maybe it came out. That really talked about the work we did actually identifying fraud too. So we definitely are looking to buy stocks and go long as a core of our strategy. We also do this thing we call portfolio protection, where we try to protect investors from fraud and let them know when we see scrupulous management teams out there. So we played a big role in doing that for a while, especially in China companies that came to the U.S. to go public. And we uncovered about 12 Chinese, I think it was 12 or 14 Chinese frauds, wrote about them, we got them delisted. And we also uncovered 22 U.S. pump and dump stocks and exposed them. So we have a lot of respect in the industry because we're not just blind longs. We also look, to protect investors too through our research. And the research is very high quality. I'll get to the services later on during the whole thing. But, the strategies haven't really changed much for us. The coronavirus definitely caused a lot of market turbulence, right? And so the question is, how do you react to that? And we do what we always do here. We're just looking for opportunities during market turbulence. So we take fear in the market as opportunity to buy stocks. I've always really been a bullish investor. Sure, you have corrections, you have times the market pulls back, but those are, how do you plan for them? You can't predict them, so you plan for them, really. And, are you going to spend your life worrying about the next correction, or are you going to spend your life, following what really history and the market just goes up over long term? And so our job really, as I'm a full-time investor, is to find companies, regardless of market conditions, that are going to survive over the long term. And if they pull back during the coronavirus, we go in there and we aggressively buy some of these stocks, which is what we did this time around. So what's happening now is so we have different strategy buckets in to do our stock picking. We have the core of our strategy, which is the really fundamentally based companies, high quality. We call them tier one companies that are high quality, good management teams, good growth prospects, really good, clean balance sheets and income statements that are undervalued that we think are going to do well for maybe 3 to 5 years at least. And so that's where where most of the portfolio is. And then around that, we have our short-term stuff, where we maybe our non-core stuff, because I'm a full-time investor, I need to make money in the short term. So I'm looking for special situation stuff that I can make money in the short term. And we can talk again about that at a different time, about case studies and how that works. It goes anywhere from balance sheet restructurings to penny stocks to turnaround companies. But there's all high-quality companies. And eventually they might become a core holding if our experience is, with that company is very positive during our kind of dating phase. So that's basically it is using. There's a lot of different strategies. So now what the coronavirus has really done here for a lot of investors, individuals, is exposing the stock market. Our GeoInvesting is growing. Our growth rate for memberships has increased tremendously recently because people are at home and want to invest, and and you have younger generation seeing this and wanting to invest. So it's a really interesting time, and we're really enjoying talking to people about that. And it's really important to have a process. Keep it simple in the beginning. So when I started investing, it was very simple. I used to be a momentum-based investor, look for companies that were seeing good price momentum, but breaking down in fundamentals also. And that was just a very defined approach to me to invest, and I would follow some principles around that. Oh, there's plenty of time for your investment process to get more complicated or try new things. You can do really well by looking at some very simple, basic things. Insider buying, what are some of the big money managers buying in this space? So let me talk about why we I'll get back to coronavirus in a little bit. Let's talk about why I invest in this subset of companies called microcaps.
Yeah.
So these are the smallest companies in the anything from market size of 300 million or less. Actually, if you go under 50 million in market cap, we call those nano caps. And why we like these, it's quite simple. Let's think about this. Anything you do in life, if you want to excel in it, it's really an advantage to maybe do it before everybody else comes in there.
Yeah, that's a definite.
Compete where less people are competing, right?
Well, like when nobody had Kodak, and all of a sudden they got announced the other day, and it went through the roof. If you were in for some reason at $2, you're doing great. Yeah,
and I'll tell you about there was actually, what's the symbol on Kodak? Is that KM? Let me see here. I believe with Kodak, and we'll come back to it. There was a key indicator of what if you were watching insider buying trends, how you could have picked it up. And I think the CEO bought a bunch. He's in trouble for that now, but he bought a bunch of stock.
Yeah,
and you could have followed that, and I'll get into that later. But so the subset. So let's think about it logically. So if there is 20,000 stocks in North America, okay, how do you get through all the minutia? How do you start getting through that? It can be very kind of intimidating for especially a new investor. Like, where do you start?
Yeah.
And you hear all these great stories from management teams. You know who to believe. So the first thing I did when I was younger, I was maybe a teenager going into college, kind of figuring this all out, was let me just reduce that universe. How can I reduce that universe just to more manageable? So then I said, all right, well, there's this microcap universe, reduces down to 10,000 stocks. So now I've cut it in half, right? And then you take from there, you take more, you do more things to cut it down. So that was my first kind of entry into it. Like, all right, let's at least, I don't want to, small. Let's see what happens if I just look at small companies. And I was having some success in small companies. I was watching my dad as a young kid investing in small companies. So I started learning that there was more than the market than just the Dow Jones and the boring companies, the S&P 500, and these things.
So was your father an investor also, or just part-time and you were watching him?
My father was we call him between part-time and full-time. He came to America in 1969 from Lebanon. Worked for a pharmaceutical company for many years. Had his own business, but the whole time he was investing.
Okay.
He was really the big influence on me that got me started in investing. And I used to watch him invest. I used to sit down and watch programs with him when I was a kid. And he would be in the basement. That's where we do all stock research. And sometimes he'd come up talking about a company I never heard of. It wasn't IBM or Intel. It was just a small little company. So I started hearing these little, kind of getting introduced to there's these small companies maybe to take a look at. And he's the biggest influence. He gave me a book to read called One Up on Wall Street by Peter Lynch. Peter Lynch is, in my opinion, the best fund manager out there that's ever managed money. I recommend anybody who's going to get into investing, especially beginners, to read that book. It's One Up on Wall Street by Peter Lynch.
Okay.
It's the go-to book. It's it's easy to read. He boils it down to when you start investing, buy what you know. Kind of be aware of what's going around in your surroundings. You're in real estate, for example. Is there special software in your industry that's interesting? LoopNet, these kind of things. And so if you work in a retail environment, is your store is your store hot? If you're a shopper, where are you shopping? Are you going to Ulta? Are you going to Sephora? You do yoga? Are you wearing Lululemon stuff? Are you drinking Monster beverage? I'm naming stocks that just went up like 5-10 times.
Yeah,
crazy returns. So as a consumer, you're around it every day. So he tries to get the everyday investor involved in the stock market that way. And from there, you can get more complicated and start doing more research to dig beyond what you know, right? And analysis like that. Yeah, so he was the biggest influence for me to get involved in investing. And but yeah, so the Microcap. So going back to that, and there's certain factors that limit the amount of investors that will or can invest in these smaller companies. Institutions aren't really allowed to invest in them. There's regulatory kind of hurdles right now that make it harder to invest in them. So you have, in 2008, obliterated a lot of investors from the market, the recession, which got rid of a lot of the investors who used to invest in these smaller companies. You just had less money chasing, which was bad in the terms of less money coming in, so it takes longer for these stocks maybe to go up. These tier one, I call them tier one companies, but it was already less competitive than the big cap companies. Now it became more or less competitive, right? So you have just less people looking for these stocks. So you can go in there and find all this wonderful public information in different areas of the market where we can talk about later. We call it information arbitrage, finding information that's publicly available that no one's really found yet.
Yep.
And it's amazing how much of that's out there. And you're not competing with institutional investors. You're not competing with some of the savvier investors on Wall Street for this information. You're just investing with normal people. They have real jobs, time constraints. So you have time to go in there and find this information. So that's just beautiful. It's unbelievable, and it still exists. It still exists today. You would think the market's more efficient as we progressed, right?
Yes.
Technologically and stuff, but it's still inefficient because there's only a limited amount of investors who will invest in these things. Now it's getting better now. So there was a period between 2008 and 2017 where it was that the effects of 2008 were still really making it hard to make a lot of money on the short term, at least, in these stocks. You had to wait to get paid. But the environment's changed since 2019, where millennials are getting. I think millennials got involved in the cryptocurrency. They kind of got the bug. The Microcap kind of market has that little kind of sexy appeal to it. Cryptocurrency's crashed. I think they found some of this. Robinhood has helped, to be able to get the everyday investor involved in the stock market. And then COVID. What COVID did was it basically created a stock pickers market, because you just couldn't blindly go buy stocks anymore like you could for the last 10 years. Just put your money in an index fund or, blindly buy a big company. Or now investors are more worried about risk and they want to know what they're buying. So that's perfect. That's perfect for small companies. And now if you look at the Microcap return over the years, let me see if I can pull up the stat here. This should be really why Microcap mantra. Find it. Here we go. Give me a second. I'm sorry, man.
Nope, no problem.
So basically, Paul O'Shaughnessy in a book he wrote called "What Works on Wall Street," he chronicled the returns of companies from in the stock market, segmenting them in different sizes in terms of market cap between 1927 and 2016, and he found out that the smaller companies, smaller capitalized companies, outperform larger cap companies by a 14.75%, annually.
Yeah, that's pretty good return, I would say.
That's pretty amazing.
Performance.
Right? There's your reason, really. And now, as a small investor, you can do that. You can invest a small amount of money and have it make a difference. For a $1 billion hedge fund, they don't care because they can't. There's not enough of these stocks for them to make a lot of money.
Mm-hmm. Yeah, they can't buy enough shares because the limited amount of shares in a microcap versus them getting a huge amount of shares of larger companies.
Right. I disagree with them, by the way, but that's their excuse.
Yeah.
I think alpha is alpha, right? But they're having a hard time. These big funds are having a hard time matching the market. So why not invest a little bit to get a little bit of juice? But they're more interested in increasing their assets.
Sorry to interrupt.
No, they're more interested in increasing their asset size, getting their fee. They don't care about it. A lot of these guys, these funds are more interested in the fees they're going to collect versus the returns you're going to get from their investors.
Yeah, the larger brokers won't allow their people to take your money if you're their client and invest in a micro cap. Even though if you have a smaller amount of money, it may go up higher. They limit them and they often don't let them invest in those companies, correct?
Correct. And it's a shame. I think a lot of it is because, Wall Street doesn't want to take money away from the stuff they're investing in, right? They want that volume there. And, there's also this misconception that all microcaps, nanocaps are all fraudulent companies. There's a lot of bad actors, and there certainly is. Yeah. But, let the investor figure that out. And, Enron was a big cap. It all comes down to one thing: take responsibility for your own actions. So the situation you're talking about is what I was talking about earlier. The environment is so much harder to invest in these companies. But yeah, you're right. And so you combine those two things: the great returns you get in the smaller capitalized companies versus large companies, plus the information arbitrage opportunities. And some of these opportunities are so I can teach someone day one to walk in a stock without even knowing what a stock did to identify an opportunity. I'm not suggesting you should do that, but I'm saying I can show you. Here's a blueprint. You don't have to know what the company does. There's a good chance that you should be looking at this company. And there's tools that we can teach to do that, which is pretty awesome. For the beginner investor to find success, I think it's really important for you to find success early as investors to gain confidence.
Yes.
You want to build bigger positions over time. You want to be able to understand how to invest in the long term.
Mm-hmm.
So yeah, that's why we invest in this space.
Okay, excellent.
And now,
a question about GEO Investing, your platform. Is that a teaching platform where you teach people, or do you kind of just give stock picks and say, buy this?
It's a little of both. We're not financial advisors.
Okay.
We're not a pump and dump site. We don't say buy, sell. We do let you know what we are doing, though.
Oh, okay.
We are buying this stock. Here's the reasons we're buying it. We support it by lots of research, reports, and articles that we develop internally. We bring our members into the research process very, very early in the process. We're not waiting until we build this big position and say, then how we're buying it. We let people know pretty early what we're doing. We create model portfolios, because I always think it's good to have more than one stock, just one. Don't bet on one stock. Bet maybe 5 to 12 stocks. So we have these different model portfolios with different strategies that members can follow, and the returns have been pretty phenomenal on those, actually. Mm-hmm. We have a run to one portfolio, which are stocks under one that we think are high quality that will eventually go over one. We have what we call the buy and pullback portfolio, which are stocks that go down for no reason at all or misunderstood information. We have the high conviction portfolio, which are our favorite companies that we hold or want to hold. So those are some of the key ones there we're looking at, and we're always updating these portfolios. You're getting research. You're getting an email from us every day. What's going on, and every Sunday you get a recap email of what we went through on the week and anything new that came up. So we're very busy communicating with you. We have a premium Twitter feed, which you can follow us on. So follow us on. Where premium members get to see what we're doing. And yeah, so that's it's not that it's really inexpensive. I mean, it's $300 for 6 months, $480 for a year. When you look what you're getting, you can't get this anywhere else.
Yeah.
It's organic research from a team that's really qualified here, and has these reputation in the space. Yeah.
Excellent.
I'd like to go. Maybe we can spend some time on our time, like some case studies, showing you like going through the strategy buckets. And I'm going to going through the little buckets, the strategy buckets, to show you, what they are. Maybe we can go through each bucket and show you how we applied that a strategy or buying a stock based on that strategy in that bucket. So maybe we can kick off like a beginner one, where here's all the beginner strategies that a beginner can use right away to start making money in the stock market. Now, investing is hard. You have to have a good discipline. It's like they said, working out, they say 90% is diet, right? 10% is working out. In investing, it's 90 or more, maybe 99% is emotional intelligence. Making sure you don't get scared out of crashes, making sure you don't get caught up in the financial media. So that, how do you do that? You do good research. Good research basically cures emotional bias. And that's what we do here at GEO. And you ask the question, do we teach too? So we do teach in a way I think we should teach. So we don't sit here with classes and teach it. We teach through example and scenario analysis. So you're going to learn the way we write our articles, and the way we write our research and communicate with you. You're learning. It's a learning process. And I also will do one-on-one Skype sessions anytime anyone, unlimited for members if they want to talk. And we go through lessons, but there's no cookie cutter approach to make, so it's all about scenario analysis. So I try and take people and individuals through that analysis. Now, the analogy is when I play guitar. Okay. Use guitar. And I had for years, I started out with classical guitar, playing Mozart and Beethoven, and then I later went to electric guitar. I gave it up for a long time until I moved to Florida. I'm from Philadelphia originally. And when I moved to Florida, moved here in 2001, part-time, 2009, full-time. I think it was around 14, 15, I met a buddy of mine, a friend of mine, and he was taking guitar lessons. So I said, let me get back into this again, because he was getting pretty good. And this was the first, that the teacher, his name is Dice Kimura, he had a very interesting way of teaching. And it wasn't like going through all this theory. Because I just got stuck with all this theory, it was mumbo jumbo, right? And he's like, we'll just play. So we just started playing, and he'd sprinkle theory throughout lessons here and there. And because sometimes I might tell you about theory on day one, and you're not even have an idea what it's all about. So every time I ask about theory, you don't even answer the question. You'll get it when it's like 2 years later. You're right, I get it now. I know why you didn't want me to ask, because I wouldn't have got it back then. So
yes.
Some framework of theory put into place early. Some of the process, practicing, right? In the stock market would be, how do you reduce the universe? These little processes. But after that, let's start applying it in real life, real time. Getting experience in scenarios. And you start building this journal in your head. You start building all this. You don't have to write a lot of it down. It just starts, instinct, you start getting it. I could right now, research a company and know within 10 minutes if I'm really interested in it. Yeah. Even though I spend hours and, weeks and, months writing an article for members. So they learn what we're doing. I know pretty quickly if I want to do it. Yeah. So we're just regurgitating that information to teach them. Now you ask, okay, why are you doing this? If you're making money. Well, part of it is, as we've grown the community and taught great investors, or taught investors to become great investors, we learn from them. Mm-hmm. They give us insight. I want to know where they're shopping. I want to know what stocks they found. And we create a whole army of a community of investors who help us all find ideas together. So I'm greedy for ideas.
To look for the best picks.
Well, what's that?
To look for the best picks, because you can't look at every single company.
You can't. I remember there was one of our biggest stocks performance we had was in 2010, early on. What was it, 9 or 2010? Yeah, one of our first big winners, and it came from a member. We were buying a particular stock. Like, no, you're looking at the wrong way. You should be buying this stock instead. And the stock went from like 25 cents, I think, to $7, $8 pretty quickly.
Wow.
And
when I was selling cars years ago, someone came into the dealership and they asked to buy a Honda Accord. And of course, I didn't know the person. And they said, hey, I heard about this small stock. If you put $1,000 into it, you can buy a new car in about 2 or 3 weeks. And I didn't know the person, and I said, oh, yeah, you know, I don't know you, so I'm not going to listen to that. But I showed them the car because I sell cars. Now, keep in mind, I showed them the car. They said, no, I don't want a loan. I said, I'm going to pay for this in cash. I'm going to come back with the cash in 2 or 3 weeks. So 2 or 3 weeks came by. They came in with a check, and they said, did you buy this stock? Now, I don't remember what the stock was. And I said, no. And he said, well, here's my check. I told you to do it. You could add your own car here if you would have listened to me. I was like, shit. Right.
The interesting part of the story is like, you didn't do it because you didn't know the guy.
Yeah, well, also, I didn't know anything about stock. So keep in mind, me as a layperson, I said, I'm not going to put any of my money into something I have no idea how it works or what's going on. So
right, it's a combination. So at GEO, we handpick. You know, it's almost like a lot of the people who give us ideas, we've handpicked them. So we hope to build trust. So if you trusted that guy to some degree, you might have taken a dab at it.
yeah,
You know, or known a few questions to ask him because you would have some exposure to the market. So the key really is who do you trust too in this whole environment?
mm-hmm.
A lot of shady sites, websites out there. They're just promoting fancy cars, fancy lifestyle, throwing money in the air, bling bling bling,
pump and dump schemes.
Yeah, and I mean, look, and a lot of people want that. I'm not saying there are investors who want pump and dump stuff.
Yeah. But a lot of people get hurt with that, and that's the problem. Like one of the other recent things that I saw is, Moderna, the CEO and Stefan Blanco, I think, and Tal Zak, they sold a lot of their shares in Moderna, and they're supposed to be one of the industry leaders that may get the coronavirus vaccine. And then Sunday, I saw news that said 3 reasons to buy. And so that is conflicting. And I'm like, why is this article coming out Sunday saying to buy? Logically, if the CEO and many of their officers are selling stock, it's usually a bad sign. So
yeah, it could be. People in China saying you're right. And then you have watching insiders selling their trends is very important. But the stock went up a lot too.
Yeah, I understand. But I was confused on the conflicting information.
There's a thing where a saying by Peter Lynch. He says, I think it's something like, "There's a lot of reasons why an insider will sell a stock.
Mm-hmm.
There's one reason they'll buy it.
Mm-hmm.
I think it's going to go up. So the buy indicator is more of a indicator than the sell indicator. Just so you know.
Mm-hmm.
Now, the things we would look at, like if he were selling stock, we'd ask, okay, well, how much does he have left, or she have left, or what's she selling? So we need to look at the context of how much the stock gone up. How much more does that person still have? So these are all important things.
Mm-hmm.
I have one company where the insider sold some stock and the stock just doubled. Apparently, I think he's buying a house or doing something. So he's doing something. So you don't know why all the time, right? So, but yeah, you're asking the right questions though. You just got to dig a little deeper to see, okay, why did that? Let's look at some of the circumstances surrounding those insider sales.
Mm-hmm.
So. I think that gives a good wrap up for now, and we can talk. What I'd like to do next time maybe is maybe we can do different case study videos.
Oh yeah, definitely. That sounds good. So can you tell everybody where they can learn more about GEO Investing again?
Sure. So you come to GeoInvesting.com, and you can learn about what we do. You can take a 7-day free trial. We also have a 30-day membership. Also, we have a 30-day membership. We have a biannual membership. And an annual membership, during that time you can interact with me as much as you want to learn what we're doing. Everything we can schedule Skype sessions or Zoom sessions. You can find me on Twitter, which I'm always like tweeting things on Twitter. That's redundant, of course, repetitive, but about education, how I look at the markets. So you learn a lot, I think, through that Twitter feed. You can follow me at Maj GEO Investing, at MAJ GEO Investing. GEO Investing also has its own Twitter handle. That's at GEO Investing, GEO Investing. So I really, encourage anyone who's interested in investing and maybe interested in what we're doing to follow us there too. And you can also reach me through direct IM there if you want to. And,
excellent. Yeah, and I'll put the link for GEO Investing in the video. So anybody watching that wants to go directly to the website, it'll be the first link in this video.
Excellent. Thanks, Pete. It was awesome. I look forward to talking again.
Sounds good. Thanks, Maj.